a loan. Hello! Today we'll explain how to read a loan estimate. A loan estimate, or LE, is a 3-page disclosure that your borrower receives when initially applying for a loan. You, as their mortgage broker, are responsible for accurately disclosing the interest rate, payment, and any corresponding fees the borrower will be expected to pay. By knowing how to properly read and understand your borrower's loan estimate, you'll be able to identify and avoid potential errors that could negatively impact the loan process, which will allow you to be even better equipped to advise your borrowers. Now, let's walk through how to read the LE. Let's start at the top of page 1, moving down the column on the left side. This portion shows you the date the document was issued. This will help you to stay in date compliance. It also shows your applicant's name, property address, and sale price. Over on the right side, this column shows the loan term your borrower is applying for. For example, a 30-year loan. The purpose of the loan, is it a refinance or a purchase? The type of product, is it a fixed or an ARM? The loan type, such as conventional or FHA, and the loan ID number. And if the rate was locked or not. If the rate was locked, this section will also show when the lock expiration is. This tells you when the loan needs to close by to avoid incurring any additional fees. Next, as you scroll down page 1, note the section labeled Loan Terms. As you scroll, you'll see that this section includes the loan amount, the borrower's interest rate, their proposed monthly principal and interest payment, and if there are any prepayment penalties or balloon payments. Scrolling further down the page, the next section is called Projected Payments. This again shows the borrower's principal and interest payments, along with their mortgage insurance payment, if they have any, as well as their estimated payments for taxes and insurance. The last section of page 1 is called Costs at Closing. This section shows the total estimated closing costs as well as the amount your borrower needs to bring to the closing table, which is typically referred to as cash to close. On page 2, you'll see closing cost details. Each section is labeled with a letter between A and J and gives a breakdown, line by line, of the fee for each section. Section A shows origination charges. This would include the cost of the interest rate, if any, and your compensation if you chose borrower paid. Section B shows services you, your borrower, cannot shop for, meaning the services that are required for this loan that the borrower can't shop for or secure elsewhere. This can include the appraisal fee, the electronic registration or MERS fee, the flood certification fee, and any tax service fees. Section C, on the other hand, shows services you, your borrower, can shop for. This includes any fees for services needed on the loan that you, the mortgage broker, have estimated based on costs from the service providers or preferred companies you usually work with. However, your borrower can choose to shop for and secure these services for themselves. Section D reflects total loan costs. This section shows the sum of the costs outlined in sections A, B, and C added together. Now, proceed to the right side of the page to view the rest of the sections. Section E shows taxes and other government fees, which includes just what it says: any taxes or government fees such as recording fees or transfer taxes. Section F is called prepaids. This shows any taxes or insurance needed in order to close your borrower's loan, such as the homeowner's insurance premium or prepaid interest. Section G shows the initial escrow payment at closing, which is the amount your borrower will need to set up their escrow account if they choose to have escrows. Section H covers other, which is any other fees that may fall outside of the previous categories listed. Then, Section I shows the sum of sections E, F, G, and H added together. And lastly, Section J shows the sum of sections D and I added together, along with any lender credits, the total of which tells your borrower their total closing costs. In the bottom right corner, you will see the calculation of how much the borrower will need to bring to the closing table, or their cash to close, which is the same thing you saw at the bottom of page 1, just with a more detailed breakdown. Now, let's move on to page 3, which shows you additional information about this loan. This includes the lender's information and your information as the mortgage broker. The comparison section shows interest payment information, such as how much the borrower will have paid in the first 5 years and how much of that goes towards the principal balance. This also shows the loan's annual percentage rate, or APR, and the total interest percentage. Next, you will see other considerations. This section doesn't show any costs. Rather, it is just a list of items a borrower should be aware of as it relates to the mortgage transaction, including the appraisal, assumption, homeowner's insurance, late payment, refinancing, and loan servicing information. Then, at the bottom of page 3, this is where your borrowers need to sign and date, acknowledging that they have received and understand the loan estimate. If you have any questions about reading or understanding a loan estimate, please reach out to your account executive. Thanks for watching.